volunteer for the VSCPA, I have had the opportunity to participate in the CPA Assembly Day for several years. I have come to realize over these years how important advocacy is to our profession. Advocacy is critical to share our story with as many members of the General Assembly as possible, many of which who may be unfamiliar with the value of the CPA's play in our communities and across our state. We are considered a trusted advisor, not only to our clients, but to our elected officials. By sharing our value and expertise with all our elected officials, they in turn can do their best for the Commonwealth and for their constituents. Today is just another example of how important and impactful our profession can be to our clients, our businesses, our communities, and our state. Thank you to our volunteers for serving, and thank you to our elected officials for willing to listen, convene, compromise, and act on behalf of those you serve.
Great. Thank you, Anne. We appreciate you kicking us off this morning. I wanted to go ahead and share our agenda for the day. So as you can see, we're here at the welcome and introductions portion. As soon as she joins us, we will hear from Delegate Roxann Robinson, who is the new chair of our House Finance Committee. We also have the outgoing Secretary of Finance, Joe Flores, joining us to give an overview of our budget. Patrick Cushing, our legislative counsel, and I will be going over the issues that we're tracking and what we anticipate seeing during this session. The chair of our tax advisory committee, or Vivian Page, will be talking to you about communicating with your legislator. We will then have another legislator, Delegate Mark Keam, who is the outgoing chair of, or outgoing vice chair of House Finance. And then Stephanie Peters will wrap us up for the day. So as I mentioned, at this point, we're waiting for Delegate Robinson. I do see a question about whether we'll be able to print out all of this information at some point. Yes, we will share copies of any of the presentations that we do and provide that information to you following the program. Also, as you know, today's program is available. There's 2 hours of free CPE available for today's program. So there will be some polling questions throughout that you need to respond to in order to get credit. And then, as always, we will email you your certificate after the program is over. So while we're waiting for the delegate, and this is the kind of thing that happens, they're very, very busy. We're lucky to have them. I'll just mention a few other things. We've got a lot going on this session, and normally part of the agenda for an event like this would be to ask everybody to take the time to go to the General Assembly and meet with their legislators. And with the ongoing infection rates here in Virginia, we've opted to keep this as a virtual event. And I know the General Assembly, while they are open and are operating in person this year, a lot of the legislators are still turning to virtual meetings. So we would like to ask that you, as you see issues from us and you see asks for you to reach out to your legislator, that you go ahead and still continue to do that and offer to meet with them virtually, make a phone call, those sorts of things. And I see Patrick just popped on. So did you want to jump in and add something?
Yeah, Emily, I would just say that right now the guidance from the House and the Senate Clerk's office is to avoid large groups in the building. So that's just, reaffirming the decision that we made early on to move this to a virtual format. There are some legislators that will only meet virtually, but most will take in-person meetings. And what we've seen is a varying degree of mask and or vaccine requirements to get into some legislative offices. So it's really a very different environment down there this year.
But
But
at
we're still
least-
very glad to have the ability to go in the building for when that's needed.
Yes, definitely. That was a handicap for us last year, having to operate 100% virtually. So we do appreciate the ability to meet in person, attend committee hearings, and get a little closer to what we would consider normal. So also while we're waiting, and I don't know, Patrick, maybe this is more of a question for you than me. I saw a question that popped up. Will the casinos in Virginia be prohibited from offering blackjack games that pay? And I'm not a gambler, so I apologize for this. It says 6:5 for a blackjack.
Yeah, so the law doesn't boil down into that level of detail. But blackjack card table games will be, are authorized in our casino legislation from 2020. But I think when just on the topic of casinos, 2 years ago, the General Assembly and Governor authorized up to 5 full-blown casinos in the Commonwealth in 5 different cities. There will be 4. And off the top of my head, I think it's down in Bristol. There's going to be one in 1 or 2 in Hampton Roads. One of the 5 casinos that were authorized was the city of Richmond, which the referendum failed. And so the debate around casinos, I think this year will be whether the city of Richmond can run a second referendum. And then you have Senator Joe Morrissey has introduced a bill that would prohibit the city from running a second referendum and essentially add Petersburg to the list of cities that could host a casino. So I think that the big discussion on casinos, since we're on that topic, is going to be whether Richmond can run a referendum again and whether Petersburg gets the opportunity to run one.
Okay, and also while we're waiting, Patrick, I think we didn't include this in our presentation, but maybe it would be worth running through some of the new cabinet appointments that we see coming in and what we think that might do to what we see over the next few months. Yeah.
So I'm just going to stay fairly high level here, but earlier this week, the governor finished up his cabinet appointments. And they came in a little bit later than we've seen in past administrations. One of the high level takeaways that I think is interesting, and I don't know that anybody should be surprised, but Governor-elect Youngkin, and he's not officially governor until Saturday, but Governor-elect Youngkin, is a political outsider in the Commonwealth coming from the private sector. And there's speculation when he was elected that he would have a fairly new cabinet in terms of faces, and that certainly has carried through with all of his cabinet appointments. I believe there are only 2 cabinet appointees that have really any significant experience in state government. The first is Shep Miller, who sat on the Commonwealth Transportation Board. He's going to be the Secretary of Transportation. And then Matt Lohr, who is a former VDAX, Virginia Department of Agriculture and Consumer Services Commissioner, then went into the Trump administration, owns a farm in the Shenandoah Valley. He's back as Secretary of Ag and Natural Resources. And I've known Matt from the time when he served actually previously as a delegate in Virginia. So the big takeaway is a lot of new faces from the private sector and from outside of state government. What we're waiting on right now are the deputy secretary appointees. Each cabinet secretary has either 1 or 2 deputy secretaries, and quite often they're the workhorses of the administration. And then all of the agency heads are appointed positions. So if what we've seen in the cabinet holds true to the deputy secretaries and the agencies, I think we're going to see a lot of new faces, fresh to state government. And of course, I think the governor-elect is going to balance, some of the institutional knowledge that really helps kind of the machine of state government work. So it'll be interesting to see how these agency head appointees play out.
All right. Thank you for that, Patrick. I see that Delegate Robinson has joined us now. So I know she has a limited amount of time available for us today. So I'd like to introduce her. Delegate Robinson was elected to the General Assembly in 2010, and she represents the 27th District, which is Chesterfield County. And important to us and to this group, she was recently appointed as the chair of the House Finance Committee. So with that, I'm going to turn things over to Delegate Robinson. You're muted.
Unmute. Okay, I gotcha. So good morning, everybody. I'm happy to be here with you. And Patrick was just here coming in tail end of Patrick's and talking about new faces. I guess I am a new face to you all as well. But I'm honored and to be the new House Finance Chair. We haven't really had our first organizational meeting yet. We just got our members yesterday. Buddy Fowler from up in Ashland, he is going to be our vice chair for finance. So I look really forward to work with Buddy, and we have I don't even have the list in front of me, but hopefully you all have heard who else is on the committee. Oh yeah, here it is. Excuse me, I'm not organized this morning. But on finance, we have some great veterans with Delegate Orrick, Delegate Lee Ware, Delegate Byron, Delegate McNamara, Delegate Freitas, Delegate Wright, and Delegate Jeff Campbell. Excuse me, Delegate Ronnie Campbell, pardon me, and Delegate Chris Runyon, and Delegate Wiley, Delegate Durant, Watts, Keam, Sullivan, Murphy, Hudson, Willett, Scott, Munden, King, Simon, and Bennett Parker. So hopefully you all have somebody who is close to your area and who you can tap into as far as a committee member as well.
Delegate Robinson, Delegate McNamara is actually one of our members.
Oh, that's great. That is great.
So,
well, he's like the guru of tax down here. So
he is
only a go-to person for me, especially as the new person on the committee. We'll have our first meeting next week on Monday, and we hope to have the new Secretary of Finance on board with us to introduce himself to the committee and give us some background and where he'd like to see the direction of the committee go. I don't have a lot to add to this conversation, and other than just my door is open. You can reach me at any time. It's always going to be open to you all. And you can always reach me through my legislative assistant, Martha. Use the Delegate Robinson at house.virginia.gov address to get to us. And then, and I'm in room 435. So if you're in the building, please come see me, come introduce yourself in person. And I look forward to working with you on a lot of these issues. I know will be impacting what you do on a day-to-day basis. So thank you for being here today.
Well, thank you so much for coming. And we definitely will take advantage of your open door invitation. I think
Great.
You probably are aware one of our big issues every year is tax conformity and getting that addressed timely. You know, a lot of our members are tax practitioners and trying to file taxes on behalf of their clients. So I know we've seen that be a big issue over the past several years. I think you'll definitely be hearing from us on that issue as well.
Yes, I guess normally in the past, and I'm not one to always do things as they've been done. The chairman has carried conformity, and Delegate Byron will be carrying the conformity bill this year. And I know there's two versions, and dealing with the PPE loans a little differently. But we've had some talks with Delegate McNamara trying to get people whole on their PPE from the last couple years. And so we're already in discussion on conformity so that we can get it out of here as quick as possible. So you all can, as tax preparers, can do your job for your clients.
Yeah, well, and you're actually going to see a third version of tax conformity that Delegate McNamara has, which is rolling tax conformity. So it's kind of a concept that we want to hold off until we get through the emergency legislation before we start to have some real conversations about it. But we think,
right.
We hope we found a solution that'll make this a little bit easier moving forward in the future.
Well, we'll definitely entertain it and see what it does and what it looks like, and if it makes good sense. You know, that's
of course.
And I think I bring something to the table because I am kind of new, I am new, I shouldn't even say kind of new. I am new to this committee. So I bring something new because it's going like, well, why can't we do it this way? I may ask different questions that have been asked in the past. So I'm looking forward to having that opportunity.
Well, we appreciate that. And as you mentioned, sometimes a fresh set of eyes is the best way to approach things. So, but again, we'll be in touch and we'll be asking for that emergency bill to move as quickly as possible. Tax season opens on January 24th.
Right.
At the federal level. So hopefully we can get Virginia's wrapped up pretty quickly and moving on.
Well, I hope so too, because we don't want to spend but so much time on that because there are going to be so many other things with the bills related to the grocery tax and so many other broadband and so many things that are being brought to me. We don't want to get ourselves bogged down on conformity when we know we eventually have to pass it anyway, right?
Right. Well, and there are, as you mentioned, there's a ton of tax legislation. I know Patrick and I are going through bills as quickly as they're getting introduced to see what we can find. And there's a lot to digest. There's a lot for us to try and understand and ask our members to help us understand. So we appreciate your service. We appreciate your time and your energy that you put into this. And please let us know how we can help. We have over 13,000 members across the Commonwealth. I guarantee we have several in your district. And
I would imagine so. Yes.
We're happy to put you in touch with subject matter experts on tax or any other issue related to the accounting profession.
That's great. So we have all your contact information.
Yes.
Martha has all that, and I'll be reaching out with questions, I'm sure, along the way. And and Patrick, I hope you're feeling better, and we'll be able to see you in committee meetings, and I can come to you with some questions as well.
Yes, absolutely. Thanks, Roxann. And I look forward to being able to get back in the building next week.
Yeah, but see, now you're like Superman, see?
Yeah, super immune.
That's right. You're super immune. I think you're probably better off than some of us others, right, that are running around here. Any other questions from you all that you have of me on anything else?
I'm looking if anybody on the audience has questions, if you want to go ahead and put them in the Q&A.
I've got one very quick as folks think of that, but Roxann, I assume you do, but do you plan on forming subcommittees? And if so, have you thought about how you're going to divide out, whether it's subject matter expertise and who might chair some of these subcommittees?
Since I just found out who was on my committee yesterday afternoon, when everybody else did, I haven't, gone through that yet. I'm going to sit down with my clerk tomorrow and Delegate Fowler and the clerk will be kind of putting our heads together and looking at that, as well as probably with our legislative service guys. So we'll have this all organized at least by Monday. How's that?
That's good. And I'm going to put in a quick plug for our member, Joe McNamara, to chair one of those subcommittees, maybe the one dealing with tax conformity or something like that.
Yeah, he's pretty brilliant when it comes to the tax stuff. He and I have already had, I think, 2 meetings discussing some of this. So I appreciate his area of expertise. And I've already when Todd asked me to be finance chair, I called Joe and I said, whether you're on finance or not, I said, will you help me out with this? He's like, absolutely. I'm a team player. I'll be there for you. So I haven't looked at it in depth yet as to, and we have some veterans on there, and we got to look at what they're going to be doing and whether they make sense just from their years of experience.
Right.
But we'll definitely have them as members. But I like opening it up to some new folks too. So we'll be looking at all that.
Excellent.
Okay.
Great.
Thank you.
Before you go, we have Thomas Main, who I believe may be a constituent, just threw a comment in the Q&A to thank you for attending and sharing information. So,
oh, well, thank you. I appreciate the opportunity to be here. I'm sorry we had to juggle the schedule so much, but we're hitting the ground running. So where you had me scheduled in before, all of a sudden I have a committee meeting.
Sure. Well,
You
We
know,
knew that was a possibility, so we appreciate you being flexible and still accommodating us in your day.
well, I appreciate you all too. So, because I need y'all, I need you to help explain some of these things to me. So, and I like hearing from the folks that are out there doing it on a day-to-day basis, who actually will see the impact and how it impacts them. Sometimes you get a lot more information on things when you hear it from the like I call the street. Right. So, and the folks that are actually working on it. So I do appreciate this opportunity.
Well, thank you so much. And I look forward to the opportunity to meet you in person.
Yeah, I do too. Anytime. My door's open, 4:35.
Okay, great.
Okay,
Thank you,
take care.
Delegate.
All right. Bye-bye.
Roxann.
All right. So our next speaker this morning is our Secretary of Finance, our outgoing Secretary of Finance, Joe Flores. He was appointed the Secretary of Finance in July of 2021, and he had previously served as one of the Deputy Secretaries of Finance. And prior to that, he was a Deputy Secretary under Governor McAuliffe in Health and Human Services. So Joe, do you have a presentation that you want to share? And
I do, Emily, and
Okay. I'm going to
I've
stop
used
sharing.
other formats. Yeah, I've used other formats before, so this will be really test my skills here. Let's see if I
Okay.
got it. Can you guys see that?
We can.
Perfect. Well, first of all, thanks for having me here this morning. This will actually be one of my last acts as Secretary of Finance, so it's an honor to be speaking to you guys. I've gotten an opportunity to speak with you before, and I really appreciate that. And in spite of what Delegate Robinson was saying, I was actually glad that she bumped me, because it gave me a few more minutes of sleep and allowed me to fight traffic and get here on time. So. And I think I've worked with her a little bit, not very much, but I think she's in Chesterfield County, or a portion of her district is in Chesterfield. That's where I live. And I think, as she said, she's got an open door policy. She is open and is willing to communicate with folks. So I think she's going to be a great leader for House Finance. So I think it's a great selection on their part. So what I'm going to do this morning very quickly is give you guys a high-level overview of the governor's caboose bill budget, which is the current biennial budget that we're in, shed some light on the 22-24 budget, or the biennial budget that begins on July 1st of this year. This obviously is a proposal that is within the General Assembly's bosom right now, and the House and Senate will begin to tinker with it or make major changes, and we'll see here in the next few days. So briefly, I'm going to talk about the remind you where we ended up in fiscal year 21, because that informed what our future revenue projections look like. I'm going to talk about some of the tax policy adjustments that Governor Northam proposed, because we do have, as you will see, a significant general fund revenues anticipated, and the governor proposed over $2.1 billion in targeted tax relief. I'm going to touch on some of the spending that you'll see in the caboose bill, but also the recommended budget for 22-24. And again, those are proposals. I'm going to touch on some of the revenue reserve actions, because we have made a significant improvement in our revenue reserves over the last 4 years, and the governor is certainly very proud of that. I'm going to talk about some of the capital investments that the governor is proposing, remind you where we are in terms of our use of American Rescue Plan Act dollars. Those are federal stimulus dollars that were provided in March, and then touch on some of the key features of the introduced budget. And again, this will be at a relatively high level. Just to remind you where we ended up in fiscal year 21, and it's, I think, informative to look back at the environment that we were in last October, and this is October of 20, when we were putting together this budget. We consulted with economists after the tax department developed its model in terms of withholding sales, corporate income taxes. And I think the trick was that we really didn't have a playbook that we could pull off the shelf and says, this is what you do, this is how you budget or forecast revenues during a pandemic. We didn't know how to do that. And so we went through our regular process, looked at how we anticipated things might work during a recession related to a pandemic, and that's not what materialized. Well, we also ran those estimates by the Board of Economists that we consult, as well as business leaders, and everybody seemed to think we should be cautious, and we were. We anticipated revenue growth of 2.6%. We actually grew, as you know, by 14.2%. What we saw, what we were seeing at the time that the budget was developed, and you see this from July to December, is very meager growth year over year. And you'll know that you guys, businesses, were adjusting to this new environment. We had no vaccine. We had the CARES Act that was provided or passed in March of 2020. That money had hit the streets, but we had no vaccine. And then you see this extraordinary growth beginning in February, but especially April, May, and June, or March, April, and May. And that's because we had not one, but two stimulus bills. One passed in the waning days of the Trump administration, one in the early days of the Biden administration, that put money in people's hands, provided loans and grants to businesses to get things moving again. We also had the unprecedented development and rollout of a vaccine. People started getting their shots in December. Businesses started to reopen, especially in January and February, and that's why you see the revenues take off. And government also started to relax some of their regulations or restrictions related to COVID-19. So you've seen the trend continue in the first few months of 22. We just announced yesterday growth year over year of almost 20% in December. So that's 5 straight months where we have seen a very strong double-digit growth in our revenues. It's important to remember that while this growth is broad-based, it's income and salaries, it's sales and corporate, it's also compared to a year prior when businesses, again, were struggling. So it's a little bit exaggerated in that sense. I think it's going to be a little tougher. You're probably going to see lower year-over-year growth beginning in January through June, especially in April, May, and June, or March, April, and May. In terms of our available resources, we looked at our performance. We looked at the first few months of fiscal year 22, and we consulted with our economists and business leaders. And with the exception of inflation, which we accounted for, we're assuming growth of economic growth that will add $13.4 billion in new general fund resources in 22, 23, and 24. Now, that does not include the $2.6 billion surplus that was reported from fiscal year 21. So that adds to the 13.4. With those resources, the governor presented a balanced budget that reflects not only investments, but savings, as well as some tax relief. And you see that reflected in the bullet points there. So this is just a pictorial in terms of where we ended up. You can see the official forecast was based on the forecast developed last October and November. And you're seeing significant growth over that trend in 22, 23, and 24. With those additional revenues, the governor was committed to not only setting aside revenues and making investments, but also suggesting or recommending to the General Assembly some tax policy adjustments. So again, $2.1 billion in tax policy adjustments are included in the governor's budget. And there's a couple of minor bills here that we accounted for in this track. So over $2.1 billion. I think it's important to point out too, that the governor is only recommending that about 20% of that would be continued. And that's the refundable earned income tax credit, as well as eliminating the state sales tax on food. The governor did not propose to eliminate the sales tax on food entirely. There's a 1% local option tax. All localities were given that option years ago, and they've all taken it up. And rather than hamstring local governments, the governor was not interested in going down that path, and so he did not recommend eliminating the local option tax. So those, the EITC change, as well as the sales tax on food, you see reflected there. The governor is also proposing to eliminate the accelerated sales tax. It's prepayment of sales taxes from businesses with revenues over 10 million, I believe it was. Individual rebates, he's proposing a little over $1 billion in a one-time rebate in 23. And then you see the tax conformity changes. And I know that's been a topic of discussion already this morning. The governor was proposing to fully conform to those changes, including the treatment of PPP loans, which I know was controversial last session. But since the federal government had made those changes in the ARPA, the governor is fully suggesting that we fully conform to that provision and those changes. In terms of spending, if you look at the caboose bill, there's basically 48 separate amendments. It's really a wash in terms of spending in fiscal year in the current biennial budget. And that's because we have some very large spending decreases within the Medicaid program. And a large part of that is related to enhanced federal Medicaid funding that we're receiving. So it is one time, but that does offset some of the $1.1 billion in spending that you see up above. The primary or principal investment from the caboose bill is a voluntary deposit of $564 million. You may remember from August, we mentioned that we had hit 2 of 3 triggers that were required, that would have required a so-called super deposit to the Revenue Reserve Fund. And while we didn't meet that last trigger, the governor was very concerned about, or very interested in making an additional investment with these historic revenue growth that we've seen. So he's recommending a voluntary deposit of $564 million to our revenue reserves. He's also proposing $150 million one time in fiscal year 22 for the Virginia Business Ready Sites program. That's because we've missed out in the Commonwealth on some businesses who have been interested in locating in the Commonwealth, but they just can't find the plat that is necessary or the land that's been graded to woo those businesses to Virginia. And so he's proposing that investment. I'll let you guys read the rest there, the additional funding for transportation and sales tax revenues related to public ed. Looking at the big bill or the biennial budget that begins on July 1st, there's a number of amendments. Net increase, we're looking at about $9.7 billion in additional spending. And some of this is long overdue, including compensation for teachers, state employees, and state-supported local employees. The governor is proposing 5% in salary increases each year of the biennium. Now, if you look back over the last 20 years, you have seen increases for state employees and teachers of maybe 3% in one year, and then nothing, and then a 2% bonus, and then nothing, nothing, nothing. And it is no surprise now that we're seeing teachers leave the workforce and state employees also looking for other opportunities. And we've had problems in our correctional facilities amongst our state troopers and in our state hospitals as well, attracting and retaining qualified staff. And so the governor is proposing this 5% increase in each year of the biennium. The governor also is putting aside the mandatory deposit to the Revenue Stabilization Fund of $1.1 billion. That's on top of the 564 that I already mentioned. He's making a one-time investment into the VRS system, the Virginia Retirement System, to pay for future obligations, to mitigate some of those costs that we're likely to see in future years. Again, it's a prudent use of one-time revenues. He's proposing additional funding for K-12 education, the standards of quality related to re-benchmarking, $821 million related to Medicaid utilization and inflation. That is simply the cost of maintaining services primarily for pregnant women and children, as well as the elderly and disabled. And again, that is just the cost of healthcare and long-term care for those individuals. There's been a lot of conversation about the need to invest in school construction and renovation, and the governor is proposing $500 million for that to address that need in our schools, to make sure that kids have a safe environment in which to learn. Behavioral health services, issues related to mental illness and addiction have certainly risen to the fore once again during this pandemic. And so the governor is proposing once again more than $500 million in all funds for behavioral health services. And then additional funding as well to increase the rates for developmental disability services, to make sure that we have quality providers that are delivering care to our most vulnerable Virginians being served in the community through our Medicaid program. And then you see additional investments in higher education as well. And then these are offset by one-time spending items that were not continued, as well as some savings within the Medicaid program, as well as K-12 education. And you see that reflected there. So on net, about $10 billion in new spending. So the top 10 agencies that receive funding accounted for about 84% of all of the additional resources provided. Most of it goes to public education. There's additional funding here within the Department of Accounts. That's it within the Secretary of Finance. That is the 1.1 billion in the mandatory deposit, as well as that 924 million in one-time funding for the VRS system. There's funding within the Department of Medical Assistance Services that I largely talked about earlier. Central appropriations, there's $807 million for the state employee increase that I mentioned. That accounts for most of that spending. And then additional investments in parks and recreation, as well as, state parks and trails, additional funding for housing and community development, including affordable housing. And then the rest, I will let you guys read at your leisure. Looking at this a little bit differently, a little bit more granularly, a little bit more detailed. We've got the 1.1 billion that I mentioned in required deposit to the Revenue Stabilization Fund, or what we call the rainy day fund, the investment in the retirement system, the Medicaid utilization and funding, the additional increase for state employees and state supported locals that I mentioned, as well as for teachers, school modernization and construction I mentioned, a hold harmless provision for local school divisions, because there's been a lot of noise within the data. So we didn't have the actual data that we needed to make our re-benchmarking decisions, but we used a proxy to make sure that school districts weren't harmed. And then skipping down a little bit, you've got additional funding for the water quality improvement program to make sure that we have safe water out there. So that's to the tune of $313 million. Again, looking at this visually, you see most of the funding goes to education. The reason that's different than the 25% that I mentioned earlier is that this includes higher education. The finance recommendations that I've previously covered, as well as health and human resources. And then you can see the remainder of funding items reflected in that slide. The one thing that the governor highlighted last night in his speech to the General Assembly was that when he came into office, our revenue reserves had dipped to $439 million. And it was on par with what we had seen, for the last 20 years or so. But the governor felt very strongly that we needed to improve our balance sheet as it related to our revenue reserve funds. And we've done that. We've done that amazingly well when you consider that this has been during a pandemic as well. So you have seen, and this has been a joint venture, I should say, too. The General Assembly has committed to building up our reserve funds, and the governor has as well. And you see almost a tenfold increase in funding set aside with the proposal that the governor has put forward. That includes almost 1.7 in additional funds set aside. We would get to $3.9 billion almost in terms of our reserve funds. And again, with one-time revenues available to us, the governor felt like that was a very prudent decision or recommendation to make. In terms of the introduced budget as it relates to capital projects, the governor wanted to make sure to build in some flexibility in the event that our revenues soften up a little bit. So we have major needs in terms of new construction, as well as renovation and maintaining the capital facilities that we have available to us. And so the governor did propose almost $2.8 billion in investments in capital projects. I would point out, though, that this is actually using cash and not our credit card. Again, while we have the cash, one-time resources available to us, the governor felt it was very prudent and conservative to use these one-time cash reserves or cash dollars instead of using the credit card. We can use the credit card when we need it. In terms of our funds from the American Rescue Plan Act, if you look at the top right here, you see that we received flexible funding from the feds to the tune of about $4.3 billion in March of last year. About $3.2 billion of that was committed already. And the governor is proposing $690 million in additional investments, some that had previously been announced and continued, but as well as some new initiatives. So you see, we will have spent $3.9 billion of the 4.2, leaving over $400 million available in the event that COVID cases are still on the rise. Like we had done back in August during the special session, we didn't spend all of the ARPA dollars available to us, those flexible funds. And at that time, Delta cases or cases related to the Delta variant were on the rise. Similarly, Omicron is out there. We've seen rising cases. We still don't know what the full impact is on our economy. And so the governor wanted to recommend to the incoming governor, the General Assembly, resources that would be set aside in the event that they were necessary, and they are, so that they can address those needs. Some of the highlights from that 690, we've got some investments in combined sewer overflow projects that are permissible uses of ARPA, additional funding for Rebuild Virginia, some IT projects within the Department of Health to make sure that we can continue to address the COVID needs within that agency. And then the balance, I will let you guys, again, read on your own. So some of the key features I've already touched on in the budget, but that is, I mentioned the $1.7 billion in additional deposits to revenue reserves. We've also built into the budget flexibility in the events that the revenues don't materialize like we have anticipated. So we can cancel that voluntary deposit to VRS if we need to. We can use the credit card instead of cash if our revenues go south. And so we've built in flexibility within this budget. We've also maintained structural balance. But we've also made major investments in our public workforce, as you see reflected down here. And we've met our commitments to mandates and commitments in the code related to education, healthcare, mental health services, et cetera. So that's a very high level summary, Emily, of where we are. And I would be happy to entertain any questions that you guys might have at this point.
Thank you for that, Joe. We actually do have a question waiting for you, which is, are the reserve funds invested? And if yes, how so?
You know, that's, gosh, I don't know that level of granularity. I believe they are, because I'm pretty sure that we earn credits on that, and sometimes that's reflected in these numbers or not. How they are invested, I suspect it's very conservative, but the details on that, I'm not aware, Emily.
Okay, thank you. Does anybody else have any questions for Secretary Flores? That would include any of our other speakers here that are waiting for their turn if you have questions you'd like to ask. Okay, we have one. So you mentioned possibly conforming to federal on PPP2. How about the Restaurant Revitalization Fund?
Gosh, I'm gonna have to peek at my notes here. I believe we are proposing that as well.
I believe that's true.
My notes tell me that I can't remember, I think we have a separate legislation, but we also included it in the budget, which is not uncommon. But my understanding is that this fully conforms to the tax treatment of expenses related to PPP, restaurant revitalization, EIDL, and similar business assistance programs. I know that that was a major concern of y'all's last year. Mm-hmm. It was heavily debated internally and within the General Assembly. And because the feds wanted to go down this path, we were in agreement with that approach.
Yeah, I believe the introduced budget and the conformity legislation fully conformed to what was in the American Rescue Plan Act. And I know they also went back and picked up PPP and EIDL and some of the other funds from CARES and consolidated appropriations for 2021. It's my understanding that they don't go back at this point as introduced to conform with 2020 though.
I believe that's correct, Emily.
Okay. So we also have a question, and I assume this is related to the taxability of grants like Rebuild Virginia and how we're treating those.
You know, I'm not advised on that, Emily. I can check with the tax department and get back with you.
Okay.
I don't know that we were making any major changes.
Right. I think I saw a piece of legislation, of course, obviously it still has to pass, that does address Rebuild Virginia. But again, it's my understanding that it may be focused on 2021 and that the $100,000 would stay for 2020. Okay. Next one is maybe outside the scope of this. Will the new administration deviate greatly from this budget in their spending?
That is a great question. I was telling a group earlier, I've given up prognosticating about what the GA might do, and you're on dangerous ground prognosticating about what an incoming governor might do. And as Patrick said, he is coming in as an outsider. I would say, though, I would just observe that there are, I mentioned the tax policy changes that the governor was recommending. There are two major differences between what Governor Northam is proposing and certainly what Governor-elect Youngkin has run upon. And that is Governor-elect Youngkin has talked about doubling the standard deduction, which is not reflected in the governor's proposals. And Governor-elect Youngkin has also talked about exempting the first $40,000 of military retiree income. That is not reflected here either. As I understand it, the proposal to double the standard deduction would cost about $2 billion in the 22-24 budget. And the exempting the first 40K of military retiree income is a little bit north of $200 million each year. So that being said, those additional proposals would come at the expense of spending items that Governor Northam is proposing. So that'll be the decision that the General Assembly and the governor-elect will have to make if he wants to pursue those initiatives, and or not do some of the. I'm sorry, I'm on the wrong page here. Not do some of the tax proposals that the governor's recommending.
Right. Well, and I think I could say anecdotally, every administration has its priorities and things that they want to see put into the budget. And then, of course, that competes with the priorities of the General Assembly. So it's likely that we will see quite a few changes to the budget before it's passed by the General Assembly. At that point, Governor Youngkin will have, or, Governor-elect Youngkin, I guess technically at this point, will have the opportunity to put his own stamp on it and send down amendments. So I think what we'll be looking at before it's all said and done will be different from what has been introduced.
Emily, I have a policy question.
Sure.
Since Joe, thank you very much for being here. But my question relates to the timing of the budget and how it seems that how our cycle does not match up with our election cycle. And you've been through this enough times, both in your role as finance chair, but also as finance secretary, but also as deputy. So do you have an opinion on whether or not Virginia should consider changing the cycle of the budget so that the incoming governor is not handicapped, if you will, with trying to put that together and really, and a governor, since we only have a single term governor, not getting basically one budget in their entire 4 years?
Ms. Paige, that's a great question. Certainly one that I've wrestled with for the last 20 years. I think, I mean, get back with me in a year because my opinion may have changed. But if you think about it, and Patrick hinted at this early on, this administration coming in as outside of state government, they're just pulling their people in. So it would almost be impossible for them to put together a budget starting from ground zero right now. So if they, we begin developing the budget in September, so around Labor Day. And it takes a good 3 months for us to create a soup to nuts budget that we present to the General Assembly. It is nearly impossible for any governor. If Governor McAuliffe he had been reelected, he would have had the same difficulties because you're bringing new people in, and it is tough for new administrations because first of all, they got to figure out how to govern, and then you dive into the weeds. So I'm not sure it's a perfect system by any stretch of the imagination, but this governor will be afforded the opportunity that the two previous governors were not, to introduce actual amendments to Governor Northam's budget. Governor Northam was not afforded that opportunity, neither was Governor McAuliffe. But Governor-elect Youngkin will be given the opportunity about a week after official amendments are due to suggest changes to this budget. And those will be considered. And as Emily mentioned, this really saddens me. The General Assembly isn't just going to rubber stamp this budget that we sent down. I think it's a nearly perfect budget. But you know, what they say in state capitals is that the governor proposes and the legislature disposes. We don't do that exactly, but we've got a soup to nuts budget that we developed over 3 months. And in the next few weeks, the General Assembly will really tweak that. I don't think they'll make major changes, but you will hear about the margins, that 10% or maybe 20% of proposals that are on the margins. That's what will change. That's what will get a lot of the airtime. The 80% is soup to nuts stuff that has to be done because of federal law, because of the DOJ settlement agreement, because of the Code of Virginia. So I know that's a long-winded answer, Ms. Paige, but I've often thought, you know, the incoming governor should get a chance to rewrite the budget, but it's nearly impossible given our system. The governor elect will get his opportunity next session to remake this budget, and certainly 2 years from now, put together a what will be his signature budget. And then 2 years hence, he'll put together a budget like Governor Northam did that hopefully does the right thing. And I think most governors do that. They don't try to hamstring their predecessor or the person, their successor. Governors will do the right thing. And then the incoming governor and General Assembly have to wrestle with it.
Thank you.
Yes, ma'am.
Thank you, Joe. We have one last question related to PPP conformity, and it says, will that apply only to PPP2? What about PPP1 funds that were not forgiven until 2021?
Yeah, I think what we did, we were making changes going forward. So we weren't going prior to tax year 21, I believe.
Okay.
So we were fully conforming with the provisions of ARPA as passed. And I don't know if they went before that or not, but tax was recommending that we focus on 21, as I recall.
Well, and I think that there are some proposals out there that may change this conversation as well, from what I've seen in my legislative review. So thank you so much again for your time today, Joe. And on behalf of our tax advisory committee and our membership, we have really appreciated the relationship we've developed with your office throughout this administration. It's been very helpful to have the opportunity to dialogue regularly with you, with June Jennings as your deputy, obviously with Secretary Lane as your predecessor, and we hope that you will keep in touch.
Well, thank you, Emily. You guys always ask great questions and play a critical role, especially on the revenue side. And so I wish you well, and I hope you maintain those same lines of communications that we had with Aubrey, June, and I, because that's just important to make sure that your message gets out. Nobody likes surprises around Capitol Square. And if you can be honest and frank with people, and I know that you guys are, it's very much appreciated. I'm sure Delegate Robinson will appreciate that as well. So thank you guys very much, and good luck.
Thank you.
Thanks, Joe.
You bet. Thanks, guys.
All right. I'm going to share my screen now. So the next part of our agenda today is for Patrick and I to start walking through what we're seeing. And admittedly, it was a slow trickle of legislation until about 10 o'clock yesterday morning, and then things started flooding in. So what we're going to walk through with you today is what we knew as of about 10 p.m. last night. And I logged in this morning and found another couple hundred bills sitting in my inbox that I need to go through. So that is where we are. So just to kind of keep everybody on the same page here, the session convened yesterday for a 60-day session. As we mentioned previously, it will be in person. We have a new House majority, and I think as we just discussed with our previous speaker, budget negotiations are going to be a major focus of this session. In the House, we do have 18 newly elected delegates, and they are now a new majority as well, with going from Democratic control to Republican control. It also presents a power shift from more urban and suburban to rural. So we've seen that in how the committee chairs were appointed. We had, under the last House majority, we had a concentration in Northern Virginia and Hampton Roads as far as the committee chairships go. Now they are scattered throughout the state. Yesterday, we had a new speaker elected. That's Delegate Todd Gilbert from Shenandoah. And then, significant changes again in committee makeup due to the new majority. So you met earlier, Delegate Roxann Robinson. Also of importance to the society is the General Laws Committee, because that is where anything related to licensure falls. And the new chair of that committee is going to be Delegate J Leftwich. The Senate is largely unchanged. There weren't any Senate elections, so there's still a slight Democratic majority of 21 to 19. But we do now have a new lieutenant governor who presides over the Senate, who's a Republican, and would cast the tie-breaking vote in the event that we do have a tie. And there are several moderate Democrats in the Senate, so a tie is still very much a possibility with the narrow majority that they have. So I think we'll see a lot more in the vein of bipartisan compromise as we work through legislation this session. So as far as our legislative priorities, again, as they stand today, prior to our ability to look through all the new legislation that has been introduced, of course, we want to see timely passage of our static conformity legislation. We do have rolling conformity legislation in the works. We've talked already quite a bit about PPP deductibility. We're going to talk a little bit about the SALT cap workaround for pass-through entities. And then we constantly are watching for regulatory reform and tax reform issues as well. So let's just jump right in here on tax conformity. The static conformity legislation has been introduced. It's House Bill 1003 and Senate Bill 94. Both of these advance the date of conformity to December 31st of 2021. They fully conform to the American Rescue Plan Act, and they also pick up some of the stimulus money and relief from the CARES Act and Consolidated Appropriations Act, but as introduced, that is only for 2021. But it would include full PPP deductibility, EIDL grant deductibility, et cetera. As introduced, they maintain the $100,000 limit on deductibility for PPP and Rebuild Virginia for 2020. Although Delegate Byron has introduced a second piece of legislation that is similar in every way except for treatment of PPP and Rebuild Virginia for 2020. And it increases those deductible amounts to $1 million. The same items, though, that we historically have deconformed with are in there: the bonus depreciation, NOL carrybacks, those things, a few that were added last year related to loss limitation, limit on the net interest deductions. There was an NOL modification, and then it also included that deconforming from the permanent reduction in the medical expense floor. So our priority on these bills is always getting them passed as quickly as possible, because they are emergency legislation and they can take effect immediately upon the governor's signature. The trick with the emergency legislation is that they need an 80% approval rate in each chamber in order for the bill to pass with the emergency clause. And if they don't pass it with an emergency clause, the effective date then becomes July 1st instead of immediately. They would have to amend the bill to strip the emergency clause, because essentially if they can't get to the 80%, the bill fails. And obviously, when we have late passage and late approval of conformity legislation, it has a trickle effect into tax season and just creates a big mess. So that will be a top priority for us, is getting those bills passed as quickly as possible. However, as you're probably aware, our focus lately has been around trying to get rolling conformity passed. And officially, our position is that we support efforts to establish rolling conformity of Virginia's tax laws to the Internal Revenue Code. And then until that can be accomplished, we support timely conformity. So we're trying to capture both approaches here in our official position. I think we've talked a lot about this over the past few years as well, where, rolling conformity allows the state to elect, unless they specifically decouple, they conform automatically unless we specifically decouple. Static conformity, which is what we have in Virginia right now, means that we adopt federal law as of a certain date. And then we've got selective conformity, which you see in a few states where they conform to certain provisions, but not others. And that, I think, is probably even a little bit messier than static or rolling would be. We've seen, especially over the past few years, challenges with static conformity. As I mentioned, we need to do this emergency legislation. It needs 80% approval. And when that gets delayed, it has a trickle effect. We also have our extremely short legislative session that just happens to take place during tax season. So that adds to everybody's stress and anxiety as we try and get answers for you as quickly as possible. So from the standpoint of why we think rolling conformity is a good solution, we think it will create greater certainty. It will help with tax planning and remove the burden of the legislature from being required to pass emergency legislation every year. It certainly wouldn't prohibit the legislature from decoupling if they determine that they need to do so. But, and then I guess it also doesn't require action by the General Assembly if there's no federal changes. So it could take one piece of business off their agenda in a light year on federal tax changes. Admittedly, we haven't seen that in quite a while. I do want to highlight this Maryland, what we're calling the Maryland model for rolling tax conformity. And basically what that says is that Maryland will conform to the Internal Revenue Code changes unless certain decoupling actions occur. And it could be the Maryland legislature enacting new tax code that does not follow an amendment, or that they determine that the impact of an amendment to the Internal Revenue Code is greater than $5 million. So we have taken this and worked with Delegate McNamara and some other legislators to figure out how we might apply that model to Virginia. We feel like having those threshold or safeguard amounts will give the General Assembly the control that they need to feel comfortable with having rolling conformity. But if we can get these numbers right, it will relieve some of the burden of having to deal with this annually. So Delegate McNamara has introduced House Bill 106, and it would take effect January 1st of 2022, which removes the need to do this as emergency legislation. And by that, I mean for tax years beginning January 1st of 2022. It would automatically conform Virginia to the Internal Revenue Code unless the impact to the revenue is greater than 0.3%. And that is an up or down number. So it could be positive for the Commonwealth or positive for the taxpayers. And then he's also put in an aggregate revenue impact to conformity of 0.6% of general fund revenues. It would require the Secretary of Finance to report on the fiscal impact of the Internal Revenue Code amendments prior to each General Assembly session, and just create that opportunity to review things, make sure everybody's on the same page, and move forward, hopefully with minimal disruption to tax season. So PPP deductibility is also something that we have talked about a bit. As I mentioned, and as Secretary Flores talked about in his presentation, the budget bill and conformity bills allow full deductibility for 2021, but they do leave 2020 at the $100,000 cap. I mentioned Delegate Byron's bill, which addresses PPP deductibility for 2020 and increases it to $1 million. And then Delegate McNamara also has separate legislation to allow full deductibility for both years, and it includes a technical fix to make the deductibility available for fiscal year filers as well, because that was an oversight with what was passed last year. So with that, I'm going to turn things over to Patrick.
Yes, thanks, Emily. And I see we have about 7 or 8 minutes left, so I'm going to have to go through this pretty quickly. And I think some of these issues have come up, but for Governor-elect Youngkin, he's got a number of tax policy priorities, which include increasing the standard deduction for individuals, providing individual tax rebates of $300 and then $600 for couples. Secretary Flores mentioned the $40,000 exclusion for military retiree pay, elimination of the groceries tax, which the Governor Northam did adopt in part in his outgoing budget, full conformity to the PPP program, and then a 1-year suspension of the gas tax increase. And that bill has already been filed. So all of these tax policy proposals that have been mentioned or discussed in the campaign and subsequent to the campaign, we've seen legislation on pretty much all of these be introduced. And I think one observation that I will make, and I think Secretary Flores mentioned this as well, is there is actually a decent amount of alignment on returning some of the excess revenue through tax credits and tax deductions and changes in tax policy to the citizens of the Commonwealth. So I do think we're going to see a number of these initiatives pass. They may not pass in the form that they're introduced, but I do think that there is a growing consensus that some form of tax relief is going to be needed and appropriate. Next slide. So standard deduction increases. Delegate McNamara has filed House Bill 472 to increase the standard deduction to $9,000 for individuals, $18,000 for married filers. Senate Bill 7, Senator Chap Peterson, a Democrat, moderate Democrat in the Senate, has proposed going all the way up to equivalency to the federal standard deduction. And then another Republican in the Senate, Senator Suderline, filed a very similar bill to McNamara with a $9,000 and $18,000 threshold for married filers.
If I can just jump in here quickly, Patrick, one difference between Delegate McNamara's bill and Senator Suderline's bill is Delegate McNamara's bill makes that change permanent, whereas Senator Suderline's bill reverts back to current levels in 2026 when the Tax Cuts and Jobs Act expires at the federal level.
Good point. Good point. SALT cap workaround. Emily, I'll ask you to chime in, but we've seen bills from both a Democrat, Delegate Watts, and of course Republicans, Delegate McNamara, to adopt the SALT cap workaround for pass-through entities. And I know that, Emily, you've been in touch on some of these issues. Anything else you want to add?
Yes, I mean, there's really two issues with this particular situation. First is that Virginia has not yet adopted the SALT cap workaround. And so as introduced, these two bills seek to do that. However, We also have an issue in Virginia where some of our surrounding states have already adopted the SALT cap workaround, and we recently received an opinion from the tax department that this would not be able to be used for an out-of-state credit on a Virginia return if someone filed this way in another state. So we have already been talking with Delegate McNamara about potentially amending the bill to address that issue as well.
Okay. I'm going to go to the next slide. A couple of other tax bills, and other than, and I'm looking at the question and answer box, and one of the things that I will say is that all of these would be for the 2022 tax year. The only elements of tax policy that would be retroactive would be those contained in the tax conformity bill. And of course, it takes an 80% vote of the General Assembly to enact retroactive legislation. So just wanted to check that one off. A couple of other tax bills that we've seen, House Bill 222, which would allow installment agreements to pay for taxes and delinquent taxes. Delegate McNamara's House Bill 295, a reduction of corporate income tax rate to 2% by 2025, and what that provides is a 1% step down by year. House Bill 352 and Senate Bill 288 would increase business interest deduction from 20% to 50% for Watts, and then 60% for Eben. Delegate Robinson, who we heard from chairing finance, has the bill from the governor's office to move the income tax to do the one-time income tax refund of $300 for individuals and $600 for married filers. And then Senator Barker, who actually chairs the General Laws Committee in the Senate, has a refundable income tax credit for low-income individuals. Next slide. So let me take a second to talk about regulatory reform, because I think this is a very important issue. And the other issue that I want to lump in with this is related to a question in the Q&A box, which is on licensure of CPAs. One of the things that I think has been seen across a number of Republican states, I know that Arizona has dealt with a licensure bill for some professions, but two issues that are of particular interest to Republican-controlled General Assemblies and governors are reducing regulations and reducing barriers or eliminating barriers to professions and occupations and licensure for those, creating more practice mobility. On regulatory reform, we see a number of bills that I've put up here that have been filed by Delegate Weber, who is a Republican in the House of Delegates. This has been an issue area that has been passionate for him. We worked with him in the past when Republicans were in control of the House of Delegates 2 years ago and before. And so you see he's got a number of approaches. The first is evaluating legislation that increases or begins to regulate an occupation. And what this bill sets up is a process by which if a new profession is proposed for regulation, that there would be a pause and a study of regulation within that profession first. House Bill 208 creates a Virginia regulatory sandbox program. These are we've seen a number of sandbox bills this session, and I haven't really seen them prior to this year. Now we have 4 or 5 sandbox bills, including one in the fintech space. And for those that aren't familiar with this idea, and it's relatively new, is that an agency is stood up to allow for, I guess, experimentation with products and services that would otherwise be prohibited due to regulation. And so it creates a system that, in some way provides for some consumer protections, but would allow, I think, in the space of accounting and the CPA profession, could potentially open the door for somebody to come in and practice in a way that would otherwise be prohibited by the Board of Accountancy regulations, but in a very narrow scope, this agency would allow that practice to continue under close supervision with some consumer protections. We have a lot to learn about what that really is going to look like. So Emily and I and the policy committee will be taking a deeper dive into that. Another bill, House Bill 244, which creates a regulatory budget program that's really tasking the Department of Planning and Budget to look at the cost of regulations and do an analysis of what that's costing for the business community. And then potentially, based on that cost analysis, determine whether additional regulation is needed, that no more regulation is needed, or that regulations need to be repealed. And then another similar bill to that is House Bill 521 from a new delegate, Delegate Marie March.
I'll just add really quickly before we move on here. I mean, our goal in monitoring this area is just to make sure that Virginia maintains its position as a substantially equivalent state with respect to our CPA licensure. We don't want to see anything change that would put that in jeopardy, because the CPA profession as a whole has a really unique model in terms of your individual licenses working like a driver's license and having practice privileges across the country. And so, you know, obviously keeping regulation under control and not overly burdensome is a very important priority, but we also need to make sure that it doesn't compromise that work that has been done up until this point to create this national model that we use.
Yeah, and just very quickly to tie in the licensing of the profession and licensing of CPAs. In addition to representing the Society of CPAs, I represent the statewide association for the architects and for the engineers. I'm an attorney, and so the way that I look at this is the CPA profession really is the pinnacle of practice mobility in terms of some of the professions that require a deeper level of education and experience to be able to practice. So we'll be keeping a very close eye on that. Sometimes the General Assembly and even the governor's office, don't really take the time to distinguish between somebody who's licensed as a barber or a cosmetologist with somebody who's licensed to do open heart surgery or do an audit of a state agency or a private corporation or represent a client on a capital murder charge. And so there's just this sense that the licensing of professions is a barrier to work for certain people. And, our job as the society is to educate these policymakers on the importance of the education and experience and licensure for, those professions that have a much closer tie to the health, safety, and welfare of the citizens of the Commonwealth.
All right, so to keep us on time, I'm going to turn things over to Vivian Page, who chairs our Tax Advisory Committee. Admittedly, this was a very fast, very high-level overview of what Patrick and I are seeing at this point. So keep an eye on your inboxes for Session Watch. Our first issue will be going out tomorrow. That's where we're going to have late-breaking information as we find legislation, as it becomes available, et cetera. And in the meantime, if you have questions, Patrick and I can continue to monitor the Q&A box, and we'll be happy to respond to you there in writing. So Vivian?
And Patrick and Emily, feel free to jump in with anything that I may happen to miss as we talk about our ability to communicate with legislators. Patrick and Emily spend way more time on this than I do, but I wanted to point out a couple of things, and I'm grateful that they asked me to talk about it, because this is something that's really near and dear to my heart in terms of what we need to do as a profession to make sure that our voices are heard. And so I want to start by pointing out a couple of things that are sitting on the General Assembly website that really do reflect that they really want us to talk to them. This is right at the top of the General Assembly website. They want us to reach out to them. So it's not just that we're kind of forcing our way in, but rather that they want us to share our opinion. And certainly when you look at what we have in the General Assembly, we've mentioned that there's one person that is a CPA in the General Assembly. That's one person out of 140 members. So we end up being the experts on this. And so it's very important for us to engage. And so part of that engagement requires that we start out by doing our homework. One of the most difficult things, the legislators, as you all know, are very, very busy, that we have to start by learning the process, the way bills work. You know, sometimes I think about looking at that old "how I'm just a bill" kind of thing from Schoolhouse Rock, because it's so important for us to understand the committee structures and how bills are introduced and how they end up on the floor and those kinds of things. But more than anything else, we have to figure out who we need to be talking to. Because the General Assembly is in a short session, and we do have one of the shortest meeting legislatures in the country, and this is our long session this year with 60 days because they're dealing with the budget. But take a few minutes to make sure you know who your legislator is. There's a tool sitting on the General Assembly website, "Who's My Legislator?" And you can just simply look that up. You can find out when you click that in, you put in your address, and it tells you who your state senator is and who your House of Delegates member is. Understand it also has some federal stuff in there too, but we're confining our information today to what's going on at the General Assembly. You get a sense of who this person is, even if you're like new to an area, you just moved, you didn't realize that you had this person versus another person, but it gives you some little bit of background, particularly with the turnover in the House in particular. Over the last 4 or 5 years, we've seen a tremendous amount of turnover in the House. So you may have had a different person. Going forward into 2022, and we start thinking, 2023, whether or not there'll be an election this year for the House of Delegates, we still don't know. But what we do know is redistricting is going to bring you a new legislator. So, but for now, you can go use that tool. You can look at their bio, you can see what committees they're on, and be able to know what legislation they're putting in. When it comes to legislation, I have to tell you that one of the sources that I use is Richmond Sunlight, because it allows me to look at the specific legislator. You know, the LIS system works very well if you have an account where you can bring in all your bills, but Richmond Sunlight allows us to do a little bit more. And then connect with your legislator. You know, all of these folks are out there. They have Instagram accounts, they have Facebook pages, they are on Twitter, they have newsletters. So make an effort to connect with your legislator so that they know who you are. And that way, when you reach out to them to schedule an appointment, they will understand exactly how the process works. So legislators, contact their offices. It's important to understand that you're probably, when you contact the legislator's office, you're not going to talk to the legislator. You're generally going to be speaking with their legislative aide, or maybe their administrative assistants, or even one of their interns. But go ahead and contact them, schedule a time to talk to them. These days, very few meetings are done still in person, but as Delegate Robinson mentioned earlier, some of the folks are actually in the building. If you happen to be in Richmond and are able to schedule a meeting in person, that's great, because it's really wonderful to do things in person. We know how we've kind of lost that over the years, over the last couple of years of the pandemic, but the meeting itself may very well be a virtual meeting. And so when you're going through the process, think about how busy they are and how their days are and how they start out with usually meetings in the morning and committee meetings and then they go into session and then they have more meetings. So their days are very long because the sessions are so compressed. Once you've arranged a meeting with your legislator, then I got a few tips for you to think about as far as what you need to be doing. First of all, it doesn't matter whether the meeting is virtual or in person. Arrive a few minutes early. One of the issues that you may have, they may be able to see you earlier, or they may be running a little bit late. So being flexible is so important. It is part of the process that Patrick and Emily see this all the time. They have a meeting with a legislator and something's come up. They've got another meeting. They had a quick subcommittee meeting or something like that, that kind of causes them to run behind. So make sure you're flexible when you're dealing with your legislator. Mention your connections, mention who you're representing, mention, you know, what your profession is. Mention if after looking at the bio, you may very well find that there's something that you have in common with the legislator. And so use that as a way of establishing rapport. Be a good representative when you go and talk about the issues of our profession. Remember, we're the experts. We are the ones that have the knowledge that perhaps they don't always have. So this gives us an opportunity to inform them about what's important. Another issue is if the meeting is virtual. And so one of the things we've seen today is just this virtual meeting. Think about your background images. Think about how you're presenting yourself as you are talking to the legislator. Today, we have the ability to do things like blur backgrounds so that you don't have the noise behind you. But think about that when you're having a virtual meeting. A couple of other things. As you can see, we've covered a lot of material in a short period of time today. When you have meetings with the legislator, you've only got a little bit of time. So think about the fact that your meeting may be a 15-minute meeting, but limit your message to about 5 minutes. Don't go any further than that. And because they have so much to go through. Yes, the LA may be in the room, may be taking notes, but part of the process is that we want to make sure your message gets heard. Think big picture. Delegate McNamara is our only CPA in the legislature. So don't get too technical about what it is that we're trying to accomplish. Think about the big picture, because we don't necessarily have accountants that can grasp the details of all of this. And certainly if they need more detail, we are willing to provide it, but also think about that big picture when you're going in. Tell your stories. There's nothing that keeps something in a legislator's mind than being able to connect it to real issues, real people. So when you tell a story about how this process that you're advocating for affected a client or affected you, then it really affected your employer. It's really important to be able to connect so that the legislator can hang on to it. But there are some no-nos. When we're talking to our legislators, please stay away from things like campaigns and elections and fundraising and politics, because that's part of our legislators. Really, when we think about how, and I know this may sound like it's not true, but when it comes to the big picture of getting stuff done, particularly for our profession, is about doing things across party lines. So we have to have good relationships, and we all should pursue good relationships with our legislators, just simply regardless of what party they belong to. They represent all of us. So we want to try to have those relationships and not get into the political ends of things. Once the meeting is over, take a couple of minutes to send a thank you note. Their time is valuable, but also it really does help to keep you connected to them. Make sure you're following the legislation. If necessary, send them a reminder email. This bill is coming to the floor. This bill is in committee. Hope you can support, that kind of thing. And certainly relationships are probably the most important thing. Relationships are access. There's no question that Patrick and Emily spend a lot of time developing relationships with legislators, because they'll take their calls, right? So part of our responsibility is to do the same. Our House of Delegates members are your neighbors, your friends. You make sure you have a relationship with them. If you don't, then make sure you try to figure out how to do it. Attend their town hall meetings. Go up when they're back in the district. Make sure that you try to develop those relationships. Sign up for their newsletters. Keep in touch with them. I'm always amazed that we have 13,000 members, over 13,000 members in the in the VSCPA. And I think it's so important that we have our collective voice when it's time for something to get done. VSCPA has set up this voter voice tool that allows us to very, very easily be an active participant in the advocacy. So they send out an alert and tell us to go and send a message to our legislator. We get to sign up. You can actually, it only takes a little bit of a time. There's a sign up link there for you to sign up for the alerts if you're not getting them. And that way, when it's time for us to be able to put our collective voice, all 13,000 plus of us can actually move the needle. And when they hear from all of us, then we have a better chance of getting it all done. So I think I kept mine to my limit to stay on time. Is there anything that we need to add? Patrick, Emily, anything that I left out?
Vivian, I think you covered it very well. There is one question in the queue that was, what do you mean by politics? You mean partisan politics? Because meeting with a legislator is, of course, politics by its very nature.
Actually, I don't think meeting with the legislator is political at all. I think it is policy related, what we're doing. And I believe there's a big difference between policy and politics. Policy is what allows us to do the things that we need to do, like getting the conformity bill done, like getting the SALT workaround taken care of in the legislation. That's all about policy. It's not about Republican or Democrat or independent or libertarian. It's all about policy. So when I say don't talk about politics, and certainly it's not just my opinion to not do that. If you look at guidance from the AICPA, they say the exact same thing. Stay away from partisan politics and deal only with policy.
Okay. Thank you, Vivian.
You're welcome.
All right. Well, Vivian will still be online. So if anybody does have any follow-up questions for her, feel free to go ahead and post them in the Q&A or in the chat. And I see our next speaker is here. So pleased to introduce Delegate Mark Keam. He was elected to the General Assembly in 2009. He represents the 35th district, which includes parts of Fairfax County. He was the vice chair of the House Finance Committee for the past 2 years. And so, we've worked very closely with Delegate Keam. And with that, I will turn it over to him.
Yes, good morning, everyone. It's great to see all of you, or at least virtually some of you. I see that there are about 130 something people online, but I only see about 5 faces, and all of them I'm very familiar with. So first of all, let me thank you, Emily, for inviting me, giving me this opportunity. And Stephanie, it's good to see you. Patrick, who I've worked with many, many years, and I look forward to working with you again this year. And of course, Vivian, I'm sorry I only caught the last few minutes of your presentation, but I've always enjoyed working with you, Vivian, and all the leadership that you've developed and shared with me, especially because as somebody from Northern Virginia, I don't have a chance to really spend time outside of my area very often, except for coming to Richmond. But it's good to hear from my friends in Hampton Roads and from across the state as to what issues that you're facing, because the work that we do in the Finance Committee and the General Assembly generally, I mean, whether we represent people from Northern Virginia or from South side or Southwest, the reality is the laws that we draft and impact have an effect on everybody in Virginia, all 8.5 million people. And so we're always mindful that we have to do things not just for our own particular neighborhoods or our own issues, but for everybody's best interest. And that is literally the definition of Commonwealth. And so I'm honored to have been able to serve in this job for a number of years now, and I look forward to working with you again this session. You probably heard from our new chairperson, Roxann Robinson, this morning. I saw her a little while ago in the building, and we chatted very briefly. She said she was so busy today that she couldn't really spend a lot of time focusing on this issue, but she did say she enjoyed the presentation this morning, and she said she couldn't say a lot because she's a brand new finance chair, but she certainly looks forward to learning from you and working with you. And in that spirit, let me just share a little bit about what I think, just kind of a background as to where we are and what I think maybe some of the hot topics. I'm happy to leave as much time as possible for some Q&As if you're interested in doing so. As Emily mentioned, I've been on the Finance Committee since my first session. So it's been 12 years now. This is my 13th year in the General Assembly. And I've served on the Finance Committee, both with Republican majority and Democratic majority. And I've seen just about every issue that we've dealt with in the last 13 years that deal with taxes and finance and other aspects of the Finance Committee's jurisdiction come through in various different forms. And so I may not be an expert, but I certainly have been exposed to a lot. And so if just endurance and having a little bit of a track record helps in any way, I'm happy to be of service to you. Now, this year, I think we're going to be in a little bit of a unique situation for a couple of reasons. One is, as we just talked about, and you heard from this morning, our new chairperson, Roxann Robinson. She's a good friend. I've worked with her very closely for many years, and she's just a wonderful, very joyful person to be with. She has not served on the Finance Committee before, which is a little bit unusual for a chairperson to come in that hadn't really been on as a member of that committee for a while. Not unique in that it doesn't ever happen, but it's somewhat unusual just because usually what happens is people that have served for a while end up moving up in seniority, and then they end up eventually taking over, which is what happened with Delegate Vivian J and myself last 2 years when I was the vice chair and she was chairman. But it doesn't mean that there's anything different about that, other than that it might just take a little bit more time just for her to get comfortable. But what she did tell me though was thanks to wonderful CPAs that she knows very well, including people like Walter Stosh and John Watkins and many other friends of yours as friends of mine, she feels in pretty good hand. And if you look at the rest of the roster of the committee, you have delegates who've been a long time serving, delegates like, I just wanted to double check to make sure I still have the right names. Yeah, Delegate Orrock is still on there. Delegate Ware, of course, was finance chair before. Delegate Byron, and on my side, Delegate Watts and Sullivan and a few others. And so I think we have a good handful of members who really know the committee, know the issues well, and regardless of our political leanings, we tend to find common ground. And if we can't do something because we don't have the money, or we can't do something because it's just not the right year to take on some kind of a big controversial issue, then I think generally speaking, we find bipartisan reasons to kill bills as well as bipartisan reasons to pass bills. I also am comforted knowing that Joe McNamara will continue to serve on this committee. He's become a good friend, and as you know, he's a CPA who really understands issues like conformity and other issues so much better than most of us, both as a practitioner and as a small business person. So I think it's good for us to have some really good quality members on both sides of the aisle serving on this committee. So I don't necessarily see us doing anything different in terms of the process and procedures. I don't know what the timings of the subcommittees will be, because last year, as you know, when we were in the virtual session, we had to literally redo the entire House scheduling, so that instead of having meetings at regular meetings times for the committees, we just did them in blocks. I'm sure we'll go back to the physical situation. So we'll figure that out in the next couple of days. But the other reason I mentioned, there are two things that are somewhat different about this year. The one is about Delegate Robinson being chair and such. But the other major reason why I think this is different is, at least from my memory and from my history, having been in Virginia politics for about 20 odd years now, the last time we had a governor who ran explicitly on a tax issue as a campaign issue, and something that he wanted to have a mandate from the people when he ran for office, the last time we had a real serious conversation about a tax discussion was Jim Gilmore. And that was, 20 odd years ago. And when he talked about, eliminating the car tax, I mean, plenty of other candidates for office on both sides of the aisle talk about taxes. Of course, you can't avoid talking about taxes when you're in politics or in government. But generally, people talk about taxes in the context of, well, if we had more money, we'd do this, or if we need to raise more money, we'll have to find ways to find money from, wealthy people or corporations or something like that. So it's usually done in the generic conversation, whereas it's rare for somebody to say, this is a tax issue I want to tackle. This is a tax cut or a tax increase I want to handle. And the governor-elect, Glenn Youngkin, definitely did talk about that in the context of his grocery taxes, as well as the fact that we now are fortunate in Virginia, like many states, having an overage of revenues in terms of what the federal government is supplemented. I don't want to say surplus, because surplus has such a very technical meaning to what that means. We don't have a surplus in Virginia. I know everybody likes to say we have several $1 billion in surplus. It's not really true. Surplus is only a surplus if, after we've spent all the money that we're allocated, that we need to spend, there is money that's left over for us to just do something with that. We're in a situation where we have exceeded our revenue expectations because of COVID and the federal support, but a lot of that was already put into place through mandatory spendings and such. So whatever extra money that we ultimately end up having this year, the question is, do we spend it down? Do we save it? Do we put it away into a rainy day fund, or do we give it as a refund? And so that is naturally a tax discussion. And in addition to that, the governor did, the new governor did talk about eliminating the grocery tax as one of the main taxes that he thinks is unfair. And frankly, many of us, I think on both sides of the aisle would agree. And many of us have been wanting to see if we can eliminate the grocery tax and other taxes as well. I mean, my personal favorite essential tax that we pay that I just think is completely unfair is taxes that women have to pay for the menstrual products that unfortunately only women have to use. And so it's unfair that you have to pay for tampons and pads and such when I don't have to pay for it. And so I think it's an unfair discriminatory tax. I actually put bills in to reduce that. And eventually we got a bipartisan bill done to reduce that down to 1.5, which is the same level as grocery taxes. So I actually put in a bill this year to say, if the governor wants to eliminate the grocery tax, can we get rid of taxes on all essential products, including feminine hygiene products and other products like that. So that's a conversation that we're going to have. But all that is to say that because the governor ran on an issue that deals with the tax code, and by opening up that conversation, he has made this session one of the first sessions for him to tee this issue up, whether it actually passes this year and whether we get something major done, or is this a first of many years of conversations? I don't know yet. I haven't seen the bills yet, but my guess is that this is definitely going to be an issue that we'll be engaging in. And frankly, I think we'll see some common ground. There'll be some Democrats, including Governor Northam, whose outgoing budget addresses a similar area in terms of the grocery tax cuts. But there may be other aspects of the tax revisions and reforms that we may find some common ground. I'll also tell you, as you know, in politics and in policymaking, there are some bright lines, and many of us who run for office with a political partisan connection, we tend to have an ideology that drives us as a member of one party or another. And some of those ideologies deal with issues like taxes. And so there are some of us on my side of the aisle who strongly believe that our code, tax code in Virginia, as well as the federal tax code, needs to be even more progressive in terms of allowing for those that are at the lower ends of the economic spectrum to be able to pay less and have less burdens on them, and then those on the higher end ought to be able to pay more and not be as burdened as much. Same thing with corporations. And so I think that's going to be just a general philosophical difference between the two political parties, and you'll see some of that come through as flashpoints on maybe some of the issues that we'll deal with. I don't know if I haven't seen the bills yet, but I know that Delegate Watts has always been interested in things like getting rid of the estate taxes, for example, or coming up with new categories of various different the income levels and such. And so as those conversations come up, I assume that we'll see some flashpoints between the two parties. But otherwise, I think this is a good year for CPAs to be engaged. I mean, you should be engaged every year anyway, but for this year in particular, I think a lot of us are going to be looking at the tax code with a fresh set of eyes to say, okay, what are some things that work? We've spent a lot of time over the last few years trying to get rid of tax credits. We have many, many, many tax credits. I'm guilty of passing a few of those myself. And so we all love tax credits, but at some point it becomes one of those Swiss cheeses where you just have so many exceptions and so many carve-outs that at some point the whole bill, the law doesn't make as much sense. And so as we revisit some of the tax provisions, we may either scale back some tax credits or not allow the sunsets to be renewed, or in other cases we may add a few more years of sunset. So I have a couple of those bills as well this year. So with that as an overview, I know I've just kind of thrown a lot of issues out there, but that's usually what happens in the first 24, 48 hours of every session. None of us really quite understand what's going to happen. People are still filing bills. My bills are still in the process of being enumerated and being assigned to committees. So we're all at this kind of exciting time as a first day of school kind of a thing where we're all trying to get to know our classmates and our teachers and our homerooms. But once we get that all done in the next 3 or 4 days, I think when we get down to the serious business, we look forward to hearing from you and letting us know what issues are really important, and more importantly, what issues are troublesome, because what we don't want is passing something because we hadn't heard from anybody and then finding out after the fact that it was a really bad thing. So with that, let me wrap up and see if there are any questions, or if you want me to get going, I'm happy to just leave. Thank you.
Thank you so much for your time this morning, Mark. Just on behalf of the VSCPA and the CPA profession, I wanted to thank you. We really appreciate the relationship that we've developed with you and your open door. I know you're always accessible to me. You always respond to my text messages. And I just greatly appreciate that and look forward to continuing to work with you.
Sure.
All right. I'm not not seeing any questions. And I know you're busy. You've got probably some committee meetings and stuff coming up and other business to conduct today. So again, thank you. We appreciate your time, and I'm sure I'll be seeing you.
Absolutely. I really appreciate the opportunity to check in with you. And my door is literally open all the time, even with COVID. And I look forward to visiting with all of you when you're in the building. And ultimately, as the finance committees meet and the agendas come up, I would really appreciate if Emily and Patrick and Stephanie, if you want to join us, to just check in with me maybe on a weekly basis and let me know what's on the agenda that raises some concerns, or vice versa. And that way, I can make sure that my side of the aisle at least will be fully aware of the issues before we start the sessions, start the committee meetings.
Absolutely.
All right.
Thank you.
Thanks,
Thank you
Mark.
very much. I appreciate it. Okay.
All right. Well, we are coming to the end of our program. So we wanted to give Stephanie, our president and CEO, an opportunity to just share some of her thoughts and close us out.
Absolutely. Oh my gosh. Thank you so much. This has been just a great program. And I am thrilled that so many of you chose to join us today. And I've got to give a lot of credit to Emily for pulling this together. Just everything has been just, even for someone who's been around and done this for as many years as I have, it's been just engaging and just interesting and just an important part of what we do. So I'm excited. This has been a great morning. And Delegate Keam mentioned something that I just want to emphasize in my few remarks, and that is the importance of being engaged. So for all of our members to be engaged in this process is so critical to the success of the profession. And, this is one of the core activities we do, is working with our policymakers, our decision makers, our government officials here in the state of Virginia. Of course, we're the only ones doing this, and so much of the profession relies on us to do this job. And we can't do it without all of you, without our members being engaged. I've been really excited this morning because I think that this session today has really given all of you insight into what we do on a day-to-day basis, working with our officials. You can see how well our team relates with so many of our legislators and other administrative, executive branch folks. So it's been really cool to see kind of behind the curtain how our day-to-day conversations go. And so Emily, Patrick, Vivian certainly has been a critical part of our team, not only as tax advisory committee chair, but just as someone who is so engaged, a CPA, engaged in the profession, engaged in the process, as well as the profession, and really understands kind of the inner workings, and has really given us a lot of great advice. So thank you, Vivian, for being here and for all of that you do. Something else, and this is something that certainly Vivian touched on, and how this is a bipartisan process for us. And you can see from today, we have great relationships on both sides of the aisle, and that is so critical, especially how, when you see how quickly the party leadership changes, like we've seen this year, and how we need to keep moving forward, and we need to stay, in the forefront of whoever's in leadership, stay in the forefront of their minds and have those relationships. And I bring this up because time to time we do have, we get feedback from members who are concerned about certain people we've had on programs or topics that have been in our articles. And I just want to assure everyone that we are strictly bipartisan, and that doesn't mean we're not going to share a certain side of an issue as it relates to what we think is important in the profession and just important in the environment, the political environment that we have to work in. And that's an important aspect to understand, that we need to be tuned into all aspects of priorities for different administrations and things like that. So it doesn't mean that we necessarily support all of those proposals, but it's an environment that we need to understand so that we know how our issues that are important to all of our members are going to fit into those priorities. So we are strictly bipartisan, and that means we need to engage with everyone. And not only do we do that through our key staff, Patrick and Emily, and our key committees, our tax advisory committee and Vivian, also our executive committee and our board of directors are engaged. They provide insight, they provide context for a lot of the issues that we deal with. We also need to rely on you as members to help us understand really how these issues affect you from day to day, because that's how we really can understand where our policies and our positions come from, what seems to be broad-based as far as it affects the majority of our members. So we need to hear from you. So don't hesitate ever to reach out to me, to Emily, to Vivian, to other leaders like Anne, and certainly Patrick, so that we can continually hear that feedback and understand. And it's okay if you disagree. We understand that, not everyone's going to agree, but it's good to know if there are issues that, that cause you to disagree, so that we can have the best informed positions. So you are a critical role. Please be engaged. And I want to lastly mention the PAC. That's something, it's our political action committee. It's where the money is. And a lot of our members choose to not participate in that. But I have to say, it is a critical component, and those who do participate are lifting a heavy lift for the success of our program. That again is bipartisan. We contribute to candidates who support the profession and who are in key positions that can impact and help us have success in what our priorities are. So, and it really is an easy but meaningful way to engage in what we do. So I think I see that there's a link. Tom, thank you, Tom, for putting that link into, or is that Brett? Brett, that might be Brett since a while. Putting that link in there. It's, this was a free session for you today. You could even think about, what you might have paid for a 2-hour CPE session and contribute that to the PAC. That will make a huge difference. It's easy. Click on the link. Even if you paid half, gave us half of what you would have paid for this, $50, that would be a huge impact. We have seen a decline in individual contributions since 2018, and we need to reverse that trend. And as we, see more and more of our members retire, we're going to have fewer folks to be able to rely on for those annual contributions. So it's important, and I thank you for your contribution. So with that, the key is engagement. Please find a way to participate, either through attending sessions like this, reading our advocacy newsletter, e-newsletters. You're going to be getting a lot of those during session, staying on top of it, letting us know when you see issues, talk to your legislators, use our voter voice. We have made it so easy. Trust me, it's so easy to reach out and make your voice heard. And lastly, make that contribution to the PAC. It's the decline is concerning me, frankly, and we need to reverse that trend so we can stay strong. So with that, Emily, I'm going to turn it back over to you.
All right. Thank you so much, Stephanie. And I just want to thank all of you who chose to join us and participate today. your involvement in our advocacy efforts is what really makes us successful. We couldn't do this without you. And, so we appreciate your time and your attention today. And as Stephanie mentioned, feel free to reach out to us at any time. We need to hear from you. We want to hear from you. We want to make sure that we're doing the best work that we can on your behalf. And as we're, I'm not a CPA, Patrick's not a CPA. We do our best to understand and explain the issues that are important to you, but it's your involvement that makes the biggest difference in helping us to succeed. So, you can, again, thank you. And we're glad that everybody seems to have enjoyed this program, and let us know what we can do to help.
Thanks, everyone. Have a great day.
Did you just want me to give it a few minutes, Emily, see if there's any last minute questions?
Sure. There was just a thank you. I think most people are leaving, so.
Yeah, it's dropped by a lot.
Okay.
There was one comment about not having audible alerts. And so for the check-ins.
Yeah, I made a note of that. Zoom, for some reason, still does not have audible polling questions.
Right.
And yeah, we've gotten a few
We just have
complaints.
to let them know.
Yeah.
So that they know that there's not going to be audible when we do at the beginning, to let them know there's not going to be audible alerts for them.
Yep. Yeah. I made a note about that too. I wrote their name down, and then if anyone else misses it, they can always email us.
Good job, Emily.
Thank you, Vivian.
Even though you got me up at 6 o'clock in the morning. I'm not a morning person.
6 o'clock? That's early.
No, it takes me 2 hours to get going in the morning. So I never, if I'm not up 2 hours before I need to do something, it won't happen.
Well, at least you didn't have to drive here. At least you didn't have to drive here. So
well, if when we do it in person, I have to come up the night before, because otherwise I'd still have to get up at 6 o'clock if I had to be like we used to do when we would meet at the offices and then go over.
Yep.
8 o'clock is just early. All right, y'all. I'm out of here.
Everyone. Thank you.
Bye, Vivian.
Take care now. Bye.
Thank you.
Bye.
Okay, I'll go ahead and end it.